In today's video, I'm going to share with you how to budget your money and manage your finances so you can get ahead financially. What happens is that many people don't understand how to manage their money properly, and because talking about money has become a taboo topic in society, many people never learn how to manage money. The last thing you want is to live your entire life paycheck to paycheck, because at that rate you will never get ahead financially. And if you're always playing catch up or looking over your shoulder, you will never focus on investing and creating wealth. Then many people in society want instant gratification, so when they see something they want, they just have to have it right then and there, even if they cannot afford it. And when they cannot afford it, they end up putting those items on credit cards or they use other forms of debt. So by learning how to manage your finances and having a budget in place, you can keep yourself from overspending on things you don't need. And once you do that, you will have extra money that can go towards an emergency fund, investments, or retirement. And if you're new here, my name is Edgar, and on this channel we talk about personal finance, investing, and business. So if that is something you're interested in, consider subscribing. Now the first step to budgeting is understanding how much money you have coming in and how much is going out. The money coming in is your income and the money going out are your expenses. Oftentimes the reason people get into debt is a lack of understanding of these two items, and getting started on a budget is hard enough when you don't have large amounts of debt. But for those who have lots of debt, it can become 10 times more difficult to get on a budget, because they have an idea of how bad their debt is, but ignoring the problem is much easier, so many people just continue with their old habits. However, staying in your comfort zone, whether we're talking about your finances or other areas of your life, is not going to help you achieve your goals. So if you want to become better with your money, then you must confront the problem head on, and in this case, it begins with your budget. First, you want to list where all of your income is coming from and how much you receive on a monthly basis. Let's say you have a job and that job pays you a salary of $4,000 every month. Then we can say you have a side hustle like an online business or driving for Uber, and that makes you around $750 per month. Then you also receive dividends from stocks or interest from your savings account, and that's around $50. For this example, we will stick to these three items, but other forms of income can include rental income, capital gains, or tips. So whatever income you receive, you should list it in this section. Something important to note is depending on where your income is coming from, you might have to budget for taxes. For example, if you are an employee, then your employer takes money out of your paycheck for things like taxes, healthcare, or your 401k. But if you are self-employed or you own a business, then taxes are not taken out of your earnings up front. But the IRS is going to get their cut one way or another, and in this case, it's going to be when you file taxes. I know many people who get paid this way and they spend everything during the year. So when it comes time to pay taxes, they don't have enough, and now they're stressing because they need to come up with thousands of dollars that they don't have. This is also true for any capital gains or dividends. So whenever you receive any one of these incomes, just remember you will have to pay taxes. So it would be a good idea to set aside some money for taxes. To keep this example from getting too complicated, I will not go into details on taxes, because everyone will have different tax rates depending on your situation and where you live. Now we can move on to the expense side of your budget, and this part is going to be a little more difficult than the income side, because you will have more expenses to list, which is going to take longer, but also because you will begin to see the extent of your spending. The easiest way to find out where your expenses are is to look over your bank and credit card statements and go line by line and list every single expense on the expense side of your budget. Then if you are someone who uses cash often, you have to be disciplined about tracking everything you spend in cash, because it's very easy to pay for something in cash then forget about it. So I would say it's better to use your credit card to make purchases, and that way tracking your expenses is easier, but you also benefit from cash back or points. But if you rather use cash because that's your preference, or you can control your spending better when using cash, then you can continue that. Just make sure you're keeping track of how much you're spending. So after you gather all of your expenses, you can begin listing them, and for this example, we will say your expenses are $4,000 per month, and because your income is $4,800, then you have a positive cash flow of $800 per month. What you don't want is to break even, because that means you're living paycheck to paycheck, and if you have an emergency, then you have no way of covering it without using debt. Or if your expenses are more than your income, then that's even worse, because your debt is growing every month. Ideally, you want to increase your income and at the same time decrease your expenses. However, it is a lot easier to decrease your expenses because you simply cut out whatever you're overspending on. So if you're overspending on dining out or shopping, then just cut back there and you should see improvement right away. Increasing your income can be a little more difficult because you cannot just walk into your boss's office and demand a raise. Well, I guess you could, but unless you make a strong argument why you should get a raise, then chances are you will not get a raise that easily. So now your only two options are to find a higher paying job or get a second job or side hustle. Now yes, you could increase your income through capital gains, dividends, or real estate income, But if you're barely breaking even or you're in the red every month, then you don't have the resources to increase your income through investments. So for now, you have to rely on a job. This can mean you work overtime at your current job, you find a job that pays you more, or you start a side hustle. All of these are great ways to increase your income. But as I mentioned, this might take a little longer. So let's talk about the easiest way you can increase the amount of money you have left over at the end of every month, and that is by decreasing your expenses. In the last example, I used $1,500 for rent, but if you get a roommate, then you can reduce your rent by half, or you can even move back with your parents, and now you're saving an extra $1,500 every month. You can also shop around for cheaper groceries, you can save on dining out, and you can work your way down your budget and find where else you can save and what you can eliminate entirely. The goal is to maximize positive cash flow, but if you begin to earn more and you spend less, but you're still in the red or at break even, then you're not doing enough, so you have to go back and find more ways to save or increase your income even more. The process of tracking your expenses and getting your budget right might take a month or two, but after that you should have a pretty good idea of where your income and expenses are, and then you can project your budget forward for a few months. Once you get your budget in a good place and you have positive cash flow, you might be wondering what's next or what to do with the extra money. And this is where you will begin to break down your budget and set spending targets. For example, you could allocate 50% of your income for necessities, which would include things like car insurance, rent, and groceries. Basically, everything you need to get by would fall into this section. Then you could have 10% going towards entertainment, which are things like dining out, going to movies, or going to a concert. Next, you should have savings for a bigger purchase or expense. Maybe your car is getting to the point where it's costing you more to repair it than getting a newer one, so that would be a great example of a big purchase. So 5% of your income can go towards this. Then 10% can go into your emergency fund to cover things like a car repair or a medical emergency. Ideally, you would like to have between 3 and 8 months of savings for an emergency fund, but how much you have depends on how stable your job is and your current financial situation. Then the remaining 25% of your budget will go towards investments like stocks or real estate. Now this is just one example of how you can break down your budget for different categories, but this is not a one-size-fits-all. There are so many places who give you different percentages and they make it seem like you must go based off their numbers, but that does not make sense because there's so many factors that you don't share with that person. For example, it could be that person is living in a state where they have lower taxes and you live in a state with higher taxes, so they get to keep more of what they earn so they can afford to invest more. Or maybe you have kids and you live somewhere with a high cost of living like San Francisco, so your necessities section could be more like 65%. The point of this example is to help you understand how to allocate your money within your budget, not to throw some numbers at you and tell you to follow them blindly. Also, when you're just getting started, you might not have enough income for everything you would like, so maybe you have to put a big purchase on hold and use that money to pay debt. In order to see the best results, you will want to get your necessities section as low as possible and invest as much as you can. The reason for this is the more you can invest into assets, the more income you will receive in the form of capital gains, dividends, and rental income. And after a while, your income will grow so much that your needs and wants section will become such a small percentage of your budget. For example, if your current income is $5,000 per month and your needs and wants part of your budget is 60%, then you can invest 40%, and when those assets begin to increase in value and provide you with cash flow, your income will begin to increase. So now you could be making $6,000 every month, and if you keep your needs and wants at the same level, then now they only make up 50% of your budget. So now you can invest 50%, and if you continue this over time, you can get to the point where you're investing a majority of your income, and that's how you become financially independent. What you don't want to do is increase your spending as your income goes up, because then you will end up like those people who are making $200,000 or $300,000 annually and are barely getting by. You want to set up your budget so you have the most money possible for investing, because there will be times when great investment opportunities come up, and if you don't budget for investing, then you will not be able to take advantage of it. This could happen because a company is going through some short-term problems, so the stock goes on sale, or you come across a rental property with great upside potential. The point is, you want to have a part of your budget dedicated to investments so they can help increase your income over time. The purpose of a budget is pretty simple, because all it is you telling your money where to go instead of asking yourself where all of your money went. Every dollar in your budget should have a purpose and an assignment, whether its job is to buy food or put gas in your tank. Now, your budget for each month is not going to be identical to the budget from last month, because some expenses do not happen every month. A great way to begin budgeting is to take your income and place it at the top of the paper or spreadsheet, and then begin to list all of your expenses under it. The expenses at the top of the list are going to be those that happen every month, like your rent, car payment, phone bill, and so on. And the expenses at the bottom are going to be those that don't happen every month, like a car repair or school supplies. And once you have everything listed out, you should go line by line and see what you can remove and where you can save. Also, this will give you an idea of what you have left over on the last day of the month, And if you are break even or in the red, then that tells you you either need to reduce your expenses some more or increase your income. And ideally, it would be both. Getting on a budget and learning how to allocate your money efficiently is not going to happen overnight, and you will not see results right away. But the point is to continue working on it and make adjustments to your budget as needed. The important thing is to take the first step to getting on a budget and commit to it, because if you cannot get the basics of money management down, then it doesn't matter how much you earn. You will always find yourself struggling, and that's why so many people who win the lottery end up broke, because they don't have those basic money management skills. So with that being said, you should have what you need to get started on a budget and begin managing your finances better. If you enjoyed watching or you found this information helpful, it would really help if you like and subscribe. Thanks for watching, and I will see you next time.